Craig Parry, Chairman of Inventa Group Companies here, calling in from the BMO conference where Robert Friedland is speaking at this very moment, the keynote address, and just checking in with you to give you a bit of an update on what we're seeing out there.
Beautiful. Well, choosing us over Robert Friedland, I'm so proud. Thank you very much. Well, what is the mood of the nation? What are people talking about?
Well, it's an interesting conference, I suppose. The most important thing we're seeing is that the CEOs of the majors continue to talk about resource scarcity, particularly around lack of copper, lack of silver, lack of new nickel projects. And there's some big things happening, of course. Robert Friedland, I was just listening to the first half of his presentation then. He, apart from being super bullish on every metal out there, but particularly the battery metals, he made the point that he's now an advisor to one of the big German car manufacturers. And he says that, they will be building an incredible amount of EVs over the next 20 years. And so demand for metals will continue. And he went on to make the point that Jeff Curry, for example, Jeff Curry being the chief analyst there at Goldman Sachs, has made the point that we're in a molecule crisis. There aren't enough molecules of copper, nickel, and any other battery metal on the planet today to be supplied to a very, very hungry market, and a market where demand continues to grow massively. So that resource scarcity is really one of the key themes. Of course, underlying everything that's happening at the moment is the Ukrainian situation. And, Robert makes the point, something I share. I've having built a coal mine in far eastern Russia, got to know Putin pretty well, and I've had dinner with him and met him a couple of times. But unfortunately, we're seeing that Vladimir's turned into something of a lunatic. And of course, so that's a sort of key concern underlying everything that's happening here is what happens in the Ukraine. And, one of the sort of corollaries or upshots of all of that is that we're seeing stronger uranium interest in uranium prices at the moment. So, of course, that crisis has massive energy implications, as does the greening of the world and the move to EVs. So there's some of the key themes. I can also tell you that, I've seen a number of fairly uninspiring presentations by the CEOs of major mining companies here in the past half a day. Robert's always tremendously inspiring, but some of the CEOs, of 20 minutes of presentation, you hear about 15 minutes on health and safety and ESG and diversity policies. Now, that's all very, very important for institutional investors and everyone really. But I come to a conference like this to hear what they're thinking, what they're seeing in terms of the markets, where they think metal prices are going, and you're not hearing much of that from those guys. So some fairly uninspiring stuff on that front. Thankfully, Robert fixed that up by being super bullish on everything that we've talked about and everything we're seeing out there at the moment.
Always. Here's a question for you with regards to what's going on with, the situation in Russia and in Ukraine with Russia. Is sanctions now starting to be imposed? We've seen Russian companies, suffering from that. I think that's the general intent. We're seeing possibly the supply chains that you've been talking about, that Robert Friedland's been talking about, will be affected even more. So what's that do for prices going forward?
It can only be positive, of course. To use a couple of examples. Oil and gas, I suppose we haven't seen, and of course, to some extent, the world relies on Russian oil and gas, particularly Europe. And we haven't seen serious sanctions on that front just yet. They have to come. I think you're absolutely going to see that. And of course, Germany now talking about keeping, of course, being captive to some extent to Russian oil and gas. Now talking about keeping on their nuclear power plants. Now, of course, they had planned to decommission those over the next few years. Now talking about maintaining those. So Germany, big user of energy, coming to the realisation that they need to be independent of Russian supply for their energy resources. So hence we've seen a real uptick today in all of the uranium names. I think Cameco was up a couple of dollars, or all 5 to 10%. We've seen most companies in the uranium space up 10% off the back of that rhetoric and the back of those changes today. So, that's something of a big, I think, for metal markets. None of this is great, of course. We've done a fair bit of research here in recent months looking at, with the expectation that this situation would arise, and looking at what that means for markets generally, and then miners and explorers. And I suppose what we've seen historically, is that whenever you have a flare-up, a threat of war or a war like this, usually typically very, very good for metals and commodity prices. And then unfortunately, we're starting to see that arise. I think, I suspect it will be fairly short-term stuff. I do have, having spent 5 years building a company in Russia, I still have friends in Russia that are connected into the Kremlin. And I suppose what we're hearing is that this should be over very quickly. I hope so. I guess we saw yesterday or over the weekend, some serious, what can only be described as maniacal rhetoric from Putin around the threat of nuclear war. Terrifying stuff. But assuming that goes away, I think that the upshot of this will be that we need to see more supply from the West of metals. And just specifically on the nickel market, nickel price. Of course, the biggest producer of nickel in the world is Norilsk Nickel, from that giant Norilsk Nickel mine. I think they produce over 15% of the world's nickel supply. We could see sanctions really threaten that. So I wouldn't be surprised if we see the nickel price tip up here very, very strongly, regardless of all the other demand factors that are emerging on the nickel front. So, watch this space on nickel.
It'll be interesting with nickel. Obviously, 40% of Norilsk's nickel is processed through the refinery in Finland. It'll be interesting to see how the West is going to penalize and sanction Russia going forward. Something like that will make a big difference to their output for sure. So just in terms of just sticking with these sanction components, and again, you've referenced oil as a space that what we have seen in the past is the fact that sanctions are put in place, but the product, in this case oil, does find its way into the market, albeit at a discount. Do you think that we'll see a bit of that clever moving by traders on a lot of these commodities?
Yeah, having sort of had the benefit of reading Mark Rich's autobiography recently, the trading houses are incredibly resourceful at getting product from where they should and out into the market. So I certainly wouldn't be surprised to see that continue to happen. And of course, the US still needs to get a lot of its supply. The globe needs to get a lot of its supply from the fungible nature of oil. So I can't see that drying up too much. But Germany and Europe talking about ending major gas projects and gas pipelines. This could be an interesting time for the world in terms of oil and gas demand, and what happens for those mega projects. I think it may be very positive for US producers and Canadian producers, of course. And we've seen that in recent times. I think you've seen a real pickup, not only in the commodity price, but you're now starting to see equities move strongly as well. So gas, I think, good place to be for the next little while.
Yeah, it's certainly interesting in Europe with regards to Nord Stream 2 not getting the approvals as expected. That's a Russia-European joint investment. So great TV, I suspect, coming down the line on that one. Let's come back to BMO and what you're hearing there. There's been a couple of big deals announced already. The big guys are coming into smaller projects than perhaps they would have in the past. What's going on?
Yeah, fascinating, isn't it? I think, of course, because what we have been from the majors in recent times, but certainly over the last 10 years, is a serious reduction in their exploration efforts. Rio Tinto has probably maintained their exploration efforts. It's had some success with the discoveries of deposits like Winu up there in the northwest shelf of Western Australia. So great success there. But most of the other guys have really reduced their exploration efforts, exploration teams and budgets. Now, for me, that's meant that we've had a happy hunting ground of, very good exploration talent. But for those majors, BHP particularly, you've seen no discoveries coming out of them and very little work on that exploration front. So, and of course, what that means is that as they turn bullish on commodity prices, which they evidently have, they start doing more and more deals further down the food chain, and you see some of the M&A that's going on at the moment. But BHP's been a particularly interesting example. We saw their deal to acquire Noront here in Canada there, 6 months ago. And today, of course, they announced a $100 million investment into the Lundin's Filo mining. Filo had that massive discovery down in Argentina. Some of the most spectacular drill results that we've seen in recent years. I think one of those holes was 1,800 metres at nearly 3% copper equivalent. So spectacular results. BHP putting $100 million into the company for 5% of the company. So values that company at what's that, about $2 billion into Filo. And I think we're going to see more and more of those sorts of deals. And certainly, one of the key themes here are those investments. And I think there's a lot of sort of meetings going on around me now, and certainly some of my companies are having these, whereby some of the mid-cap and major companies are wanting to talk to smaller companies about what they have and their recent discoveries. So you can see something emerging. I think, my observation on the markets over the last 20 years has been that when you get a move in a commodity price, it then the benefits of that commodity price trickle down through the different tiers of companies. And we saw last week Barrick announced an outsized profit result, share buyback, and an enlarged dividend. That drove Barrick's share price up 5% on the day. Very, very positive news. We're starting to see some of the mid-tier producers' share prices move more solidly as well. Junior market, I think, really takes another, typically lags about a year to 2 years before the junior market really starts to move. And of course, those institutional investors, they get set in the majors where it's obvious that the share price appreciation is going to happen off the back of outsized profits. And then they start looking down the different levels of companies through the mid-tiers and then into the junior market. And of course, the majors do the same things when it comes to the position. So there's a sort of knock-on effect that comes as people look down the food chain to the smaller fish and smaller opportunities to invest in and acquire. I think that we're on the verge of that sort of breakout, in mid-years and into the juniors over the next 18 months. So it's a sort of good time. There's sort of no rush for investors to get set, I think, other than, if you think that the commodity prices are going to, and I think I wouldn't be surprised if we do see gold pop above $2,000 here soon. It's worth looking at it and investing now, but you've still got a bit of time to get set in some of the juniors out there. I think we haven't seen big moves in those companies just yet, but they're coming. They're absolutely coming.
So these increases in the commodity prices across this year, I mean, we've seen copper, we've seen nickel, we've seen lithium. The battery metals themselves have seen huge appreciation this year. The equities have not followed at the same pace. But with the moves by these majors looking further and further down the food chain to smaller deals, because the big, super big deals, these super giant deals just aren't there like they used to be, just made your job a little bit easier, didn't it?
So we're on that sort of that trajectory now, whereby the majors are looking at smaller and smaller companies. Filo, of course, very, very big company controlled by the Lundin family, very successful. The Noront deal, a little bit more interesting. That's a $400 million acquisition for what is, they have a modest nickel resource there, but in essence, it's a $400 million exploration level deal, which is astonishing. We haven't seen that happen for probably 10 years. So I can see a really sort of bullish picture emerging from the activities of those majors. And again, it all gets back to the lack of exploration over the last 10 years and lack of development work. So these guys are, the commodity prices really taken off, and this disconnect between demand and supply that Robert Friedland's just been talking about today, that underinvestment in the sector means that there's going to have to be a lot of buying of junior and mid-tier companies by the majors to maintain their production profile.
Does it change the way that you go about delivering your companies into market in the sense you've always been about strong fundamentals. Does this change the way that you spend your money, allocate your capital? Because if you know that the majors are looking for smaller projects, that you don't need to work them up as much as before, but you do need to tell a story.
Yeah, it sort of goes, I think, it points to a couple of things there. You still need to go for quality projects. You need something that sort of goes back to my old Rio Tinto saying, size of the prize, costs of the test, and chance of success. The size of the prize has to be right for these guys. So getting a project, you don't want to focus on small projects. You need medium and large projects, and go for the best quality ones you can get. Thankfully, we've been successful in that in the Inventa group of companies. We've got some fabulous projects on that front. And certainly I can tell you that some of the majors are now starting to take notice of what we're doing. So that's very, very positive. I think, and just on that front, we've had some very good news out today from Vizsla Silver. We put out our maiden resource.
Congratulations.
The market was expecting a maiden resource. Yeah, thank you for
nice
that.
Number. Very nice number.
Beautiful number. A bit of a muted response from the market because of the sort of geopolitical ructions that are going on at the moment, unfortunately. But, I think the market was expecting about 80 million ounce maiden resource there at our Panuco project. We've put out a resource that's 138 million ounces. Of course, that the data cutoff on that resource was the end of November last year. So we've had another 3 months of drilling with 10 rigs. So that resource is growing all the time. So I think, that will turn into a true tier one or world-class silver district there. So that, we're very, very excited about that. Surge Copper, we've been putting out some very strong numbers, of course. 50 metres at 1% from surface at our project there in British Columbia. So, we're in the right space there. We've got battery metals, silver particularly, and also copper in those companies. So lots of good news there. And I'll remind people, I think, Matt, when we last talked, we talked about our Vizsla Copper. We're scouring the globe for major copper acquisitions as we speak. And I can tell you, it remains very, very hard to find any quality projects there at that exploration through the development stage. We're really, quite astonished, I can tell you, by the lack of quality projects out there. So I think, this all points to very, very much stronger metal prices over the near term and particularly the longer term.
Brilliant. And I guess the only black sheep in this conversation is uranium price. What on earth? It's got everything it needs to be driven higher. It's not listening. It's not listening.
Of course, there's about, if you include the Yellow Cake, the Sprott Uranium Trust, and one other that I'm missing there.
The Kazakh one.
Yeah, the Kazakh, that's right, Kazatomprom. There's about $1.8 billion sitting on the sidelines, ready to come into the market. Because if you look at Sprott Uranium Trust, you need to have the NAV needs to their share price needs to be above their NAV, of course, before they can start buying, and that's not been the case for the past few months because of the work where it is just at the moment. I think that could change very quickly. And of course, energy scarcity and global energy supply concerns around the Ukrainian situation are suggesting to people that uranium prices really could move very strongly here over the next few months. And we're seeing most of the uranium plays up 10% plus today.
But it's a fool's game to estimate what that price will be. History tells us.
It's burnt me far too many times.
I think everyone can make that claim. Look, I know you're busy. You've got meetings to go to. I really appreciate you dialing in from BMO in Miami. Go enjoy the meetings, the sunshine, and everything else that happens down there. And we'll catch up with you when you're back in Vancouver. Okay.
Fantastic, Matt. Always a pleasure. Thank you very much.